Today it's a special video, and so I'm going to start by singing three songs, and you have to tell me that what is the common link between these three songs. Okay, here we go. मैं तो रास्ते से जा रही थी, मैं तो भेलपुरी खा रही थी. The second song is आए हो मेरी जिंदगी में तुम बहार बनके. And the third one is दो दिल मिल रहे हैं मगर चुपके चुपके. Were you able to guess? Hey folks, Rachana Ranade here, and I welcome you all to a very interesting video. If you have guessed till now, the common link between all these three songs is tips. And what has it got to do with it? Well, all the music labels for all these three movies is owned by Tips. Okay. Now, if you're a 90s kid, you might be very much aware about Tips Music. Earlier, it was known as Tips Industries, by the way. This company was founded back in 1988, and it was mainly involved in the production and distribution of motion pictures, that is films, and acquisition and exploitation of music of rights. We are going to understand some technical terms in the coming parts of the video, but you must know one important point, that in May 2022, Tips Industries Limited got demerged into two separate entities. One was Tips Industries and the second one was Tips Films. Now this Tips Industries got renamed as Tips Music Limited, and today the discussion that we are going to do is on Tips Music. Well, don't consider this as a tip or a stock tip. This is just a video so that you get to know about how can you analyze a company from the music industry. Before we move on to the business model, which is a very important part of the video, let me tell you about one thing. Diwali is around the corner. So, typically what we do during Diwali is we pray to Goddess Lakshmi for a prosperous life. But what if I tell you that we can go one step ahead? Rather than just praying for prosperity, why not prepare ourselves and back our prayers with some action? And how can we do that? For that, you can check out our courses on our websites rachanaranade.com and rachanaranade.in. On our .com website, we have all the courses in English. We have three category of courses. One is the beginner level courses, one is an intermediate level courses, and one are thoda advanced level courses. But if you want to, kickstart your journey in stock markets, three courses are a must. One is basics of stock market, one is fundamental analysis, and the last one is technical analysis. And if you feel that, I don't want to invest in stock market, I want to just invest in mutual funds, and I want to ensure that my money management part is sorted. For that, two courses are a must. One is mastering money management and one is magic of mutual funds. But if you feel that I'm not a beginner or an intermediate category, I'm a advanced category person, then you have courses something like F&O and Art of Value Investing. So take the right steps this Diwali and ensure that, like we prepare for Diwali by cleaning up our houses and something like that, let's prepare for our brighter financial future. And I'm going to assist you for that. You can use these special coupon codes for single as well as combo courses so that your Diwali can be a little bit more special. Now, first, let's understand about the whole music industry and the value chain. And that is how you will understand about the whole link right from music composition to the monetization of that music, right? So, for that, have a look at this. Now, if you see here, first and foremost in the business model, we have all the music creators. We'll have lyricists, we'll have music composers, we'll have singers. So, these people are first in the value chain and they get paid by whom? They get paid by the film producers. Now, film producers are going to own this and they are now going to sell this music once it is ready. Once the songs are sung, they are mixed properly, they are published, whatever. They are going to be owned by whom? By the film producer. Now, film producer is going to sell the rights, music rights to whom? To the music labels. Like what? Like Tips. Okay. Now, what will Tips do with this? Basically, now the label will own the IPR, that is nothing but intellectual property rights. Now, what do we mean by this? When I say they own the IPR for that, they technically own the license of this music. So, anyone who wants to use this music anywhere, they will get some royalty for that. They'll get some payment for that, in short, okay? Now, who is going to use this music? Simplest and the most common example that you can think of is streaming platforms. Now, I'm sure everyone has someday used maybe something like a 𝐲𝐢𝐬 or maybe Spotify or Ghana, whatever, any music streaming platform. So whenever any song is to be played, let us say on Spotify, Spotify will have to pay something to the label, to let us say example Tips, and that is how they will get the right to place those songs on their platform. Okay, so I hope you have understood the overall business model. I have also simultaneously explained the value, but I'll just quickly tell it to you one more time. Producer is going to pay to the music creators. The music label is going to buy that music from the film producer, and music label is going to monetize these rights through various channels like I mentioned about Spotify, Ghana, whatever, or through even OTT platforms. And ultimately, streaming platforms is going to pay whom? Is going to pay the music label based on what? Based on number of streams. Okay, so I hope you have understood about the basic business model. But before we move on to the next section, I would also want you to tell about how the value chain looks like, or how the content pyramid looks like. And for that, have a look at this. Now, if you see here, this is the whole content pyramid where you can see music is at the topmost part of the pyramid. And why do I say that? I say this because it has a high repeatability, and that is the reason why it is high in the value content or in the whole pyramid. And what do I mean by this? See, whenever a news channel gives a news, what is the life of that news? 2 hours, 24 hours, 48 hours is the life of the news, because new news is going to come up and replace that. Okay, so there is no repeatability. TV serials, if you were even fan of some TV series, then I'm sure you might have watched it once, twice. Some rare TV series like Friends or Game of Thrones or even Mahabharata, Ramayana for that matter, they are the ones which have like pretty much high repeatability. Other than that, I'm not sure. Web series, how many times will you watch? 1, 2. Same is the case with films. 3, 4, 5. Not more than that. But music, I'm sure you might have listened to few songs like even some hundreds of times. And that is the reason why, because of high repeatability, it has greater economic value, and that's why it ranks at the topmost point of the pyramid. Now let's go a little bit deeper and understand as to how are they going to generate revenue. Two major revenue streams. The first one you already know about, how many number of times that music gets played. Based on that, they are going to earn more. So more repeatability is equal to more revenue for a music label like Tips, number one. Number two, it is also revenue from advertisement. Now what do I mean by this? Let's say as an example, their music is placed on YouTube Music. That's also one of the platforms. Okay, let's say a song is going to be played on YouTube Music, and just before their song, an advertisement is placed. Okay, so what happens is that YouTube collects the advertisement revenue, and they'll split it up between them and the music label. Okay, so you can imagine that T-Series, which has the highest number of subscribers on YouTube, what level of money they may be earning, right? But coming back to the discussion, Tips is going to earn through two ways. Number one, streams, and number two, advertisement. This is clear. Now, for that, we need to understand how many people are now using mobiles. More and more mobiles that are going to be used, or more smartphone users, you can say, more and more data subscriptions, more and more OTT subscriptions. That is that going to be positive or negative? Obviously, it's going to be positive, right? So here, have a look at this chart. You can see here smartphones have been increasing. More and more smartphones is equal to more and more accessibility to the music platforms, something like this Spotify or JioSaavn, whatever. Okay, second, you can see even data subscriptions are on the rise. So this is going to be providing them a good tailwind to grow, right? Second one is music, paying music OTT subscription. What do we mean by this? Number of people who are ready to pay to the OTT platform to listen to music. And you can see that has grown from 2 million to 7 million in 2023. So both numbers are definitely encouraging, right? Now, if I were to move on to advertising spends, now more advertisement, if that is being spent on digital, is that going to be a good sign? Answer is obviously yes. And for that, have a look at this pie chart. Now, if you see here, television spends is the second highest, third highest is print. Obviously, the highest one is digital, that is contributing to 44% of the advertisement spends on different media. Now, the important point is that, okay, it is 44%, but is this percentage increasing over the period of years, or is this decreasing? And for that, have a look at this. Now, if we see here, digital, which was around 20% of the overall advertising spend across various media, in 2019 it was 20%, and that has been growing and growing and growing, and at 2025 it is estimated to go to 55%. And you can see everything else is dropping. You can see television dropping, print media dropping, baki radio, cinema, that's at a very low point. So all in all, is this a positive sign for the overall industry? Answer is yes. Now let's understand from where does Tips actually generate the revenue. Now what do you feel? See, finally they are going to make Bollywood songs, okay, maybe some regional songs as well. So majority of their revenue is going to come from India, and the answer is wrong. I'm sure you'll be surprised, but 71% of the revenue comes from international markets. Barely 29% balance is going to come from domestic markets. So you can imagine the popularity of our songs outside India also, right? But through which platforms is their music plate. For that, have a look at this, and you will see that their digital partners, all the ones that we were talking about, be it YouTube, be it Spotify, be it iTunes, Apple Music, whatever. So all these 𝐷𝐢7, Gaana Hangama, all these are going to be their digital partners. They also have multiple sync deals, be it with Netflix, Viacom18, or you can see all these are the sync deals. They also have broadcast partners, something like Star, Sony, Viacom, 𝐬𝐿. So all in all, I hope you have understood how do they earn their revenue. Now, if they were to earn more revenue, they should have a bigger library of songs. Higher number of songs is equal to higher licensing fees that they are going to get, and is equal to higher revenue. So we'll first have to understand how many songs do they own. And if you see, they own a large music library with a collection of over 30,000 songs. Okay, so for Tips, it is 30,000 songs. For 𝐷𝐸, which is one of their peers, it is just 5x. So they have IP rights to almost 150,000 songs. And if I'm talking about T-Series, which is not listed, they have a library of over 2 lakh songs. So I'm sure when you heard about Tips 30,000, you might have felt like, wow, 30,000 songs is an amazing number. But when you compared it with 𝐷𝐸 and T-Series, I'm sure you might be like, oh, this is pretty less. So what is the pain point that you identified? It's number of songs, right? So ideally, they should invest more to have more and more rights for multiple songs, and that is how they'll be able to generate more and more revenue. But is the company doing anything about it? We are going to understand about that in the coming sections of the video. But first, let's now compare revenue of Tips with revenue of overall music industry. And if you can see here, you can see that from 21 to 24, the revenue for the entire music sector has been going up, and it has grown at a CAGR of 14%. But if you have a look at the revenue growth of Tips industries, you can see that it has grown at a CAGR of 39%. So obviously, they have outpaced the industrial growth, which is again a good sign. Now, recently their Q2 numbers came up, Q2 FY25. And if you have a look at this, you will understand that their revenue from operations has grown at a 32% YOY. And there's a big increase in content cost, or content cost, music cost basically, that has gone up by 194%. And if you're like, what is this content cost? Basically, if you remember, what was the value chain? There are first music producers, or there'll be singers and musicians. They will compose the music, they'll record it. It will be owned by the producer. Then producer will sell it to the music label, and music label is then going to earn through the digital rights by, I mean, by number of streams, right? So whenever a music label like Tips, they wants to earn through streams, first they need to own that content, and for that they need to acquire more and more music. So if you can see here, their strategy is very clear. They want to own more and more music so that they can earn more ultimately, right? So that is the reason why their cost has jumped, of content cost has jumped 194%. Still, their operating EBITDA has gone up from 49.8 crores to 59.5 crores. So that's a jump still of 19%. And if I want to talk about operating EBITDA in percentage terms, that is still at 73.8%. I know it has dropped on a YOY basis, but still 73.8% as an operating EBITDA is not bad at all, right? And if you check at PAT again has dropped from 65.2% to 59.7%. Again, you can see one of the big reasons is increase in content cost, but all in all, 59.7% is not that bad. Now, when the management was asked that what is your guidance for the top line growth, that is the revenue growth and PAT growth, management has mentioned in one of the interviews that they are targeting a 30% growth in the top line as well as in the bottom line. Okay. If I want to talk about their balance sheet, main point I feel is it's a debt-free company. That's a good point. Plus, their cash reserves are pretty much healthy right now. Talking about the shareholding pattern right now, shareholding has dropped from 75% to 64.15%, almost 10%, a shade more than that has been sold off. When a question was asked about this in the con call, you can have a look at this. Management has very clearly mentioned, you probably already know this, the promoters have sold around 6% stake in Tips Industries to grow their film production business. So, total 10% stake has been reduced. Out of that 6% stake which has been reduced, that money basically has been used to grow their second business, which is about the film related business, right? But all in all, if I were to just, summarize things right now, last point which I wanted to mention is that about the overall profitability. If you can see, if you can have a look at this chart, you can see that overall the YOY jump in profits has been pretty significant. It's at a 66.2% jump, and be it revenue, be it PAT, it has been in a continuously increasing trend. And I always say this, right? Whenever I analyze companies, I generally don't like to analyze companies where PBT, I mean, it's a negative, they are in losses, or there are some companies where operating profit level is also in loss. So operational level also the company is in losses. So happy to see that this music label related company is continuously growing in their profits as well as revenues. Now let's have a look at the technical analysis for this stock, and for that have a look at this. Now I'm on a weekly chart, and you can see that on a weekly chart also the stock has been, I mean, continuously, it was in a sideways trend for a long time. If you were to check this, then it broke out, and it went up from June 23 roughly to roughly March 24. Then again it formed one more base here, you can see, and from here again it gave a breakout, and now you can see after this move again it consolidated here, and currently it is at this level. So you can understand, I just thought of giving a weekly chart first so that you can understand what is the way in which this stock is moving up. It's a consolidation, a breakout, again a consolidation, then breakout, again a consolidation, and now let us see where this stock is moving. If I were to go on a daily time frame, this is where it is right now, the base that I was talking about. It broke, it cooled off a little bit, but today as I shoot the video, the market is still on. It's just above our line that we have drawn. Okay, also interesting to see that where is the 50 days moving average. It's also above the 50 days moving average, which is considered as one of the support levels. If I were to talk even about the Fibonacci levels, you can see here it is currently taking even a resistance at R3, which is at 798. But all in all, you can see that the chart structure wise also it is in which trend. If you can just check, I'm just going to remove these drawings so that it will be easier for you. You can see here, this is like a recent high, a recent low, and it has formed a higher high, and it is here right now. So nowhere it's in a negative zone right now. Typically it's moving in kind of a higher high, higher lows zone. This was the first time that I did any video on a stock which is from the music industry. I hope you loved this musical video. We did understand the business model, how do music label companies earn. We did understand about the financials, the technicals. And if you did like this information, don't forget to smash the like button. Don't forget to share this video with your friends. I'll see you in the next one. Till then, take care. Jai Hind and bye.